evening, everyone. Welcome to tonight's presentation. If you can hear me, just give me from 1 to 10 in the chat. The extent to which you can hear and the extent to which your network is able to access tonight's meeting. Give me 10 if everything is fine, and 1, rate the connection to sound. Just give me 1 to 10. Also, let me know where you're joining us from. Thank you so much, Miss Patricia. I see 8, which means everything should be okay from your end. All right, ladies and gentlemen, tonight we'll be talking about the Skyward Community Field and the products within the ecosystem and how to access the SWC Field ecosystem. But before I begin, it's important to point out at this stage that this information is for education and for informational purpose. What we are providing you here is not investment advice. So any decision you make is at your own discretion, because our goal is to introduce you to the ecosystem and provide you what the ecosystem does and how it benefits its participants. Now, tonight we are going to be looking at the SWC services such as SWC Field, SWC Pass, etc. And this is a comprehensive infrastructure that is aimed at supporting participation in the global market. Now, how does it work? The SWC company is taking a new direction, and from the previous SWC ecosystem that was more or less a platform where everyone could access, this SWC Field Showcase is accessed only through SWC Pass, and it provides participants with the access to their infrastructure. And in this new infrastructure, they use advanced legal standards for participation in venture projects. For instance, they use SPVs, that is special purpose vehicles, to participate in projects. Now you'll be learning how this all works and how you can participate in the SWC Field as well as in the affiliate program, the agent program in the SWC Field. Now let's begin by this very important observation. If you look at today's world, you observe that a lot has changed. Technology has advanced rapidly, capital growth have increased, and there are now more opportunities than in the last 10 years. However, if you look at the private investment market, access to projects that are yet to get into the public market, you will see that access to this opportunity is still restricted. It's only accessed by a select few, mostly accredited investors, venture capitals, angel investors, mutual funds, etc. And if you are not an institutional investor or you don't have serious capital to be considered an high net worth individual, these kinds of opportunities can still be unavailable to you. And that's the challenge that SWC Field is here to solve. We live in an age where there are so many opportunities, and it should not be restricted to a select group of people. So SWC Field is creating an ecosystem that will allow access to private projects by participants who are interested in those projects, so that you can move from being an observer to taking an active role in some of these advanced opportunities. Now, most times when you go, for example, to do research on your own to look for opportunities, you are going to be faced with information overload. you would see so much information that you become confused. In fact, it will leave you with more confusion than clarity. So it's common to feel that opportunities are unavailable to everyday persons. However, what you must note is that knowledge is not what is lacking, it's access that is lacking. For instance, when you talk about knowledge, you know about the you knew about the planned IPO of SpaceX, and you knew about the fact that there were people who already owned the shares of SpaceX. So it's not a knowledge problem. It's not that we did not know. For example, you can say maybe for some of us that we did not know about Google, Amazon, and all these big names that we hear today before they became public companies. We didn't know about them. But today, what you find is that even though you know, for instance, you know about OpenAI, you know about SpaceX, you know about Dangote Refinery. These companies, okay, apart from SpaceX, some of these companies are yet to go public. But can you buy the ownership units of those companies? Most of the times the answer is no, because you simply don't have the access to these projects. So knowledge is not the issue here. We know, but access is the problem. It's like you know about this thing, but it's exclusive to a select group of people. So access architecture is what SWC Field is creating. This architecture, right, is aimed at bridging the gap between regular people, the teachers, the lawyers, the doctors, and opportunities to support and participate in high-tier projects. Now, in order to effectively do this, SWC Field has upgraded their infrastructure in order to match with the latest international and legal standards. So this has meant implementing a number of things. For example, they now have a selection process. When they want to pick a project and list on their showcase, it goes through systematic selection. They also now have a more robust legal model, and that's based on participation in projects through special purpose vehicles. We'll talk more about that in the later part of tonight's presentation. They also have a technology platform which enables people to have access to these opportunities, and all of this is available in a structured environment. Now, I'd like to introduce you to that structured environment. It's called SWC Field, and it's like a showcase for next generation projects. So projects that are yet to go public, projects that are futuristic. This showcase can give you the first access to them. Projects like Atlas, projects like more projects will come up in the showcase. But right now, we currently have the Road to 1 Million product and Project Atlas already available in the showcase. So it's not just a random list. They don't just select and list projects. Rather, it's a structured environment where projects are selected and compared with a portfolio design that is deliberate. What this means is that they categorize projects according to their risk level, so that you that's interested in venture projects, you can easily find them. You are interested in stable projects, you can easily find them. You are interested in projects that are balanced. They are not so high risk, neither are they so safe in terms of balance, in terms of the growth versus the risk level. So you can find them categorized in the tier according to their risk level, according to their stability and growth potential. So this is a very carefully curated showcase. It's not random. Every project in this showcase has already gone through very extensive preliminary screening. And as I said earlier, they are categorized according to risk level. So this allows you, the person who is accessing the showcase, to view all the opportunities available through the lens of professional analysis, not your own analysis, but analysis that's already been done for you by professionals. So it's not just marketing hype or promises. It's a showcase that has already been vetted by professionals and is designed to provide participants with the opportunity for asset diversification. Here you can select projects based on your needs, and you can access these projects through SWC's SPV structure, special purpose vehicle structure. We will talk more about that later. Now, like I mentioned before, projects here are categorized according to low risk, moderate risk, and high risk projects. So low risk projects, you will find stable projects that are going to help you with portfolio sustainability. Then moderate risk projects are balanced. They allow both stability and growth potential. And then the ones that are high risk projects are venture, startup, and innovation projects. They have the capacity for high growth, but they're also very high risk. So you see the project that suits your risk appetite and you go for it. Now, we already mentioned that every project undergoes extensive and rigorous vetting. So this is the 5-step vetting criteria that they usually use in accessing projects, and it's only projects that meet all these criteria that are eventually featured in the SWC showcase. So when they finally showcase the project, they will give a description according to these 7 points that you see on your screen. So they are going to describe the project's details in the project description, and you going through the showcase, you can read extensively about a project before you decide to participate. So this includes things like the risk segment of that project, high, medium, or low, the investment logic behind that project, the entry threshold, the risk factors, the liquidity restrictions, etc. So they want you to make an informed decision. They are not just giving you marketing hype and marketing promises, rather they're giving you detailed information in order for you to be able to make an informed decision. Now let us talk about access to the SWC field. Access is not free. It's available for those who purchase the SWC Pass. What is the SWC Pass? It's a software as a service subscription that's available in 3 levels. But before I tell you about the levels, let me tell you what the pass provides you access to. It provides you access to SWC Field Project Showcase, and it provides you access to the SWC Field product, which is called Road to 1 Million, or let me not call it a product, let me call it a strategy. Now, SWC Road to 1 Million strategy is an analytical tool that is aimed at giving participants a ready-made tool they can use to access projects of listed companies in the stock exchange market in order to build a long-term paying US and Russian companies in every given month that you can buy. And when you buy those listed companies, when you buy stocks in those listed companies, you become a participant in all the benefits, including dividends. I'll tell you my own personal experience. I bought, according to the strategy, I will not mention the particular company I bought, because if I do, it's as if I'm already telling you what was shared in that document, and it's confidential because it belongs to the intellectual property of the SWC field. However, one of the shares I bought in the month of June, 1st of June, by 30th, that company paid dividends and I was one of the recipients. The dividend they paid was $1.46, and I was wondering to myself that if I had about maybe 100,000 of this company shares, or even maybe 50,000 or 10,000, and they paid $1.48. If I had 100,000 shares, that would be $146,000. because they paid $1.46 per share. Now, if that company were to, if you were to have enough shares in that company, such a quarterly payment, because that company pays quarterly, of $1.46 can really be a financial boost if you have many of their shares. However, because the company is already in the stock market, they are trading, as when I bought, they were trading at $136 per share. Now, with $136 per share, it tells you that to accumulate a large number of shares becomes a challenge, because you are buying this company when the price is already very high, or when the company is already selling at a high price. So, like Warren Buffett will say, it's better to buy a wonderful company at a fair price than to buy a fair company at a wonderful price. So this is one of the challenges when you buy companies already listed. They're already trading at sometimes very high prices, and you cannot buy so many of their shares. And if dividends is what you're looking to have, you're building a dividend company stock portfolio, and your long-term goal is that your dividend income should be able to take care of your maybe monthly expenses and maybe even give you enough to have some savings, etc. You might discover that buying shares of mature companies already at their height, and they're already well known in the market, you might have to pay so much for it. Now, some of these companies that you can also find in SWC Project Showcase are private companies yet to go public. So for them, you will be buying or seeing their pre-IPO portions, accessing it through an SPV at a fairer price. So for example, you take part in the private placement or private funding rounds of one of these private companies. What you will experience is that they give what is known as investment risk premium. So you are buying their shares at a very discounted price because they are compensating you for taking the risk to invest at such a time when the company is still private. Are we together? Now, you also have within the SWC field an agency program, and you have the ability to receive agency remuneration through the agency program. So if we were to summarize all the benefits of what the participants in the SWC field is getting, you're getting an infrastructure for managing assets and participating in platform projects, that's SWC field projects, and you are also accessing a methodology for building a portfolio of companies already in the public market. So it gives you access both to information that can help you build your portfolio of public company in the stock market and buy their shares, as well as access to private companies yet to go public. So it covers the two areas, private investing and stock market investing. Now, so you can think of the SWC field as a showcase for projects, and you can think of the SWC Pass as your ticket to accessing that showcase. Are we together? Now, we already talked about Road to 1 Million. Road to 1 Million is a flagship project or product in the SWC field. It gives you monthly dividend portfolio strategy for US and Russian markets. It also gives you specific capital allocation as well as asset selection logic. And the best part is that you only need 10 minutes per month to use this product. When you get the signals within 10 minutes in a month, you are able to place all the purchases. You will of course not be doing this within the SWC field. You have to have a broker account. Then you just use the signals to go and buy the recommended stocks from your broker account. Like we mentioned before, information is everywhere. But information from open sources and free content alone is not enough, because what we've seen, and even those who have tried using free content, is that they end up with more confusion and contradiction than clarity, because free content lacks structure. Free content does not have the kind of structure you get when someone is actually curating information and providing it to you because perhaps you have paid for that service. So when you go for free content, you will have to either create a structure of organizing that information yourself, or otherwise you will face information overload. So SWC Pass provides access to SWC Field, and in that SWC Field Road to 1 million, you will get portfolio architecture, you will get analytical structure, step-by-step processes, and clear frameworks. So this is the difference between random information and organized information. As we continue this conversation, if you have any questions, please note them down so that at the end you can ask your questions. Now, with the SWC Pass, you are moving away from emotional decisions to structured decisions. You are moving away from random investing to a capital allocation logic. You are moving away from solo participation to community and ecosystem participation. And you're moving from confusion to clear frameworks. So we're moving people from being observers to being participants. We're moving people from chaos to structure. And there are multiple subscription options depending on the participants' needs and the participants' budget. We have the essential, which is basically the first level of participation. We have the plus, we have the ultimate. Now, each option has different number of years. The essential is for 1 year, plus is for 5 years, and ultimate gives you access for a lifetime. That's basically what's different about the three of these participation options, because they each give you access to the same level of benefits, just for different duration. So the important thing is not the price. The important thing is how long you intend to have the access. For somebody who wants to build a portfolio, for example, the strategy called Road to 1 million is all about building a portfolio that eventually reaches $1 million. And if your goal is to build such a portfolio, you would agree with me that it's going to take you a fair amount of time, especially if you are building it from zero. So I did a calculation, which by the end of this presentation, I'm going to show it with you. So stick around because you are going to want to see that. But I did that calculation. I came to find out the number of years it's going to take you to make $1 million if you are investing from zero. So the different amount of money that you invest, of course, will show you the different period of time it will take. So I'm going to run that by you, and by the end of this presentation, you will even have the opportunity to suggest the figures, and we will run the calculation together, and you will see everything, and then we're going to pick out some lessons from that. All right, so moving on. How much does professional investment infrastructure normally cost? How much does it cost if you want to pay financial advisors, pay for analytical services? This usually costs hundreds, even thousands of dollars per session for financial advisors and analytical services. But you see, the SWC aims to integrate multiple layers into one system. Positioning this SWC subscription merely as an expense will be missing out on the value that it is bringing. Because if you want to buy something that's going to give you $100,000 and it costs you $1,000, and you say $1,000 is too much to pay, you have just lost a potential $99,000 you could have made if you had spent that $1,000. So most times, middle class and poor people usually think of how much it costs. Rather, rich people think what they stand to lose if they don't pay that particular price. I remember Grant Cardone used to say, pay the price today so you can pay any price tomorrow. And that's just the idea. You must focus on what you're getting and not what the cost of what you're getting is. Because if what you're getting far outweighs the cost, then if you don't pay that price, you will lose out on all those benefits. So instead of losing a potential asset because you want to save some money, then why don't you use that money to buy an asset that can return you even more money than you spent? So that is where real value is. Real value is in leveraging knowledge, leveraging access, and positioning yourself where you can easily find future opportunities. Okay, so this is just the steps that you need if you want to join the road to 1 million. So it's a simple step-by-step process, but for those who are already in the SWC ecosystem, all you need to do is from your back office in SWC, you enter SWC field and you register there, and then the process of registration is very well documented. If you want the step-by-step document, I can share it with you. But when you are creating or when you are linking your SWC account to SWC field, use the same email. Then instead of creating a new password, just click on forgot password so that it will send a link to reset your password to that email. And then you use that link to create a new password. Then you log in to SWC field. Then you will see the various participation options, the SWC pass. At this stage, you will need to pick the one that is suitable for your budget, and then you will need to fund your account in order to, secure the subscription that you have chosen. You also need to complete your KYC in order for your jurisdiction to be determined, and then they can show you projects that are relevant to your particular jurisdiction. Now, please, one important thing to note here is that your account, your previous SWC account, as well as your structure which you have already previously built, is automatically synchronized to your SWC field account if you use the same email. So make sure you use the same email as you use in creating your SWC account in order for the link not to be broken. All right, like I promised at the beginning of this presentation, we're going to talk about the special purpose vehicle, which is in line with the updated legal participation model that the SWC is adopting. Now, before we move into the next part of the presentation, were there any questions from the first part? Any area where you are not having clarity, just write in the chat. But if everything is clear, then we can move on. Now, so what is an SPV? SPV stands for Special Purpose Vehicle. It is something that is used in professional as well as institutional finance. It's a widely used term, and it's used to organize participation in venture projects more effectively. And this is how it works. If several people want to combine their capital and enter into a project, they can create an SPV, and the SPV will act as one investor, but it will be representing the interest of the several participants who combine their capital through that SPV. So let me say it again. This is a project. Let me say Dangote Refinery is a private project being financed. It's in the stage where we call private placement. and they have listed out the criteria for participation. They've said minimum participation is 1 million shares, right? And 1 million shares at the price they are selling their shares, 35 cents, will cost $350,000. And then you thought about it that, you don't have $350,000, but you have $50,000, and you have 6 other friends who have $50,000. And if you all come together, 7 of you will have $350,000. You now say, okay, let us form a company that will now invest in this project. And this company is the special purpose vehicle representing you and those 6 other friends of yours who want to access the private placement of the Dangote refinery, for example. So does that make sense? That legal structure that you created is what is known as a special purpose vehicle. If you understand, then we can move on. So an SPV is simply a separate company that's created for a specific product or opportunity. And what does that mean? It means that if you see 10 projects in the SWC field, each project can have its own structure of participation, its own SPV, and so participants' funds are not in one place. Rather, they are separated, and all the rights as well as the participation in each of those projects is structured legally through that SPV. So what this does is that it improves the transparency and the organization of participation, because you are not simply participating in something that is vague. It is something that is structured, it is something that is legal. So that's what the SPV does for the participants. So it performs several functions. I already mentioned some of them, segregating the risk, for example. So one project does not affect another, and then it's transparent. It is also according to the latest professional standards, and it is a vehicle for aggregating capital. So these are how the SPV helps the investors. Now, there are different countries with different legal systems, which is why the SWC Field platform does what is called KYC in order to determine the jurisdiction of the participants and also their country of residence, in order to assign them to their appropriate legal structure for their jurisdiction, for their respective jurisdiction. So you'll be joining through the system that is legally acceptable for your jurisdiction. And we have the jurisdiction broadly categorized as follows. We have USA, we have Europe, we have Russia, and then we have multi-region. So you will only see projects that are accepted in your jurisdiction. And this is important for compliance, participant protection, and legal transparency. So this is one of the reasons why structured participation is important. A structured infrastructure is important. Are we together? You can always give me feedback through the chat. I already gave an example of an SPV, so I won't dwell much on that. I'll just move on to the operational process of how you participate step by step from beginning to end. Okay, I think I actually covered this during the presentation. So what I'll do is that I will just state that in every given project, right, there is the when and how you can get your funds back in terms of exit and liquidity. So different opportunities will have different timelines. Some opportunity operates a fixed term, and some opportunity operates flexible term. Some opportunities are going to tell you when you can liquidate or when it's possible for you to liquidate. while in other cases they will tell you that it is not possible to liquidate maybe until the project does a public IPO. So every project differs in terms of exit and liquidity. You need to make sure you understand all the conditions of liquidity before you participate, to avoid questions like when are they paying dividends, when can I sell my shares, all those questions. In order to avoid them, please understand the liquidity conditions before you participate. Project Atlas is already live on the SWC field. Road to 1 million is also live. So these are products that you can access today if only you take the step and buy your SWC pass. So the question I will ask you is, why have you not yet done the needful in order to access all the benefits that are waiting for you? So it's important to do the needful, because time is your most valuable resource. And they say time flies and waits for no one. Time flies and waits for no one. Right, so there is the agency program in the SWC field, which is also available to every participant, and it works in pretty much the same way as the previous agency program has worked. So I'm going to stop sharing and ask if there are any questions. At this stage, are there any questions related to what we have just looked at, what we've just been talking about? Are there any questions? I promised I was going to share something with you. So I remember my promise. I said I did a calculation of how long it takes to make $1 million, build a portfolio of $1 million, and depending on how much you are investing, how long it will take. So I'm going to share that with you, and I hope that some of us will live more enlightened than we joined this particular meeting. So let me share my screen again. You should be able to see it. I don't know how to make this bolder. Let's see. Let me see if I can zoom in a bit. Okay, so the figure should be clear enough on your screen. It should be clear enough on your screen. Right. So yeah, here I have this Excel document, which I'm going to explain to you so that it makes sense to you. Now, the first thing you need to know about this document is, first of all, everything here is just for illustration. It's not, of course, it's based on historical data, but it is also not, there are many assumptions. For example, one of the assumptions is, we assume that this person here, let me change this figure. We are assuming that this person invests $8 a day. Now, please, $8 a day for 30 days is going to amount to how much? Tell me in the chat, or confirm it in the chat, because I already know how much this will amount to. If you invest $8 every day, how much would you have invested by the end of 30 days? Who is doing the maths? If you have done it, type in the chat. How much would you have invested if you invest $8 every day for 30 days? Nobody has given me an answer yet. I want to know who the first person to write the answer will be. I can already see people rushing to their calculators. This is something that normally we should just be able to compute in our minds or in our heads and just say the figure. But it's okay if you have to use a calculator. Just type in the chat if you have done it. Thank you, Mr. Godwin. Yes, if you invest $8 every day, you would have invested by the end of 30 days $240. Now, 30 days, let's assume 30 days is the, of course, there are months that are longer and shorter, but let's just say 30 days is 1 month, right? Now, if 30 days is 1 month and you invest $240 in 30 days, in 12 months, how much would you have invested? So Mr. Godwin was the first to give the answer the first time around. Let's see who gives the answer now, this second time. Miss Patricia, yes, you're correct. $2,880 is what you would have invested in 1 year. $2,880. Now, let me put that figure in this Excel sheet. Now, this column is simply based on a formula. Look at the formula at the top. Let me zoom in. The formula is A1 plus A1 times 15%. What that means is that what we have in this place, A1 here, this figure here is 15% on top of this original figure. So what we have here is 15% added to 2,880. That's the formula in this column. Now, why did we put 15% there? It's based on the assumption that the stocks market or the stock market has historically returned 15% per annum on average. Of course, this the numbers fluctuate, but we're working with 15% and we are leaving it constant. This is an assumption that every year, hypothetically, but every year you will get 15% on whatever you invest in the stock market. Now, if that is constant, 15% is constant, we want to now ask a question. If such a person investing $1 every day, who is investing $240 every month and investing $2,880 every year, is getting 15%, how long will it take for him or her to make his first $1 million? I'm sure you would like to know. So let's go to the next column and let's put a formula that this amount of money, let me zoom down a little, this amount of money realized at the end of year 1 added to this, the person now invested the next year, which means he invested an additional $2,880. That's in year 2. And then in year 2, he also got additional 15%. Now, let's extrapolate. Let me copy, and then I'm going to paste this. I'm going to highlight the cells down, and then I'm going to paste this into these cells so that we can see, right? That's to say, every year, this person is adding $2,880 to his portfolio by investing $8 a day. And every year, he's getting 15% on top of what he invests, and then he's always carrying it as his investing capital for the next year and adding $8 every day, which is $2,880 every year. So now, this person, how long will it take him to make $1 million? Let's go and find out. $1 million started appearing in his portfolio at year 28. Let me zoom in so that you can see. It is at year 28. Year 28. So it took him 28 years to make his first $1 million. Are we together? 28 years. Now let us see from this first $1 million how long it took before he made his second $1 million. So how long did it take him to get to 2 million? Did it take him another 28 years? Let us find out. Look at the portfolio. He made his $2 million appeared in his portfolio at year 33. So even though the first 1 million came when he was 28 years old, within 5 years, at 33, he had made another $1 million. Are we together now? How long did it take him from here to make his next $1 million? At what point did we start seeing $3 million in his portfolio? At 36 years. for another 3 years. In another 3 years, he made another $1 million. He got $3 million. How long did it take him from $3 million to $4 million? Another 2 years. In just another 2 years, this man is already seeing a portfolio of $4.4 million. That's assuming he's still investing $8 every day and getting 15% every year on his investment. And the very next year at 39, he's already in $5.1 million. At 40, he's already at $5.89 million. And at 41, it's already almost at $7 million. It's at $6.7 million at 41. See, there are many lessons from this thing we have just done. Number one, you don't need to invest big in order to make big returns. You just need to be patient and consistent. That's number one lesson here. Number two lesson, it will take you a long period of time to make your first million. But between your first and your second million is going to take you a shorter period of time. Between your second and your third million will take an even shorter period of time. Between your third and your fourth million, an even shorter period of time. And it continues to become shorter and shorter as you have more money. Are we together now? So what does that tell me? It tells me that when you have money, making money becomes easier. Are we together? Are you following? It tells me also that building wealth is a long-term journey. There's no shortcut to building wealth. Building wealth takes time. It took this man 28 years of discipline and consistency to make his first $1 million. Is somebody getting what I'm saying? So it's not a game of 6 months. Somebody is promising you that they have a platform that can make you millions within a short time, and you are packing your family wealth and you are putting it there. Oh no, they are about to steal from you. Are we together? Building wealth takes time. It takes discipline, consistency, and commitment. But when you build your first million, your next million becomes easier. And if you know these things, you cannot easily be deceived into throwing your money away in one Ponzi scheme. Because in fact, when you have the discipline to build wealth, you become difficult to sway by distraction, such as those sideways schemes that they normally bring and tell you, hurry up and join, bring money. When you want to put that money there, you will realize that, no, I have a portfolio I'm building. Every month I'm committing $240 to that portfolio. If I take this money and I put it in this scheme, it means that I would have removed from my investment capital. You say, hello, please keep your scheme. I am building a portfolio. I am building this portfolio for my child. And when my child is 20, I would have built this portfolio to this amount. If all things being equal, I continue to get maybe 10, 15% every year. So keep your scheme. I know what I'm building. It will focus and discipline your wealth building strategy. You will not be erratic or careless. Are we together? Now, I've told you what I learned from that illustration I just showed you. I want you to also tell me if you learned something and what you learned from that illustration we just looked at. If you want to unmute your mic and share, you are free. If you want to mute your mic and just type, you are free. But did you learn something from that? Because when I ran this analysis for the first time, I was inspired. I was inspired by the discipline it takes to build wealth. People who have built wealth, they are not careless people. They are disciplined people. Yes, especially those who had to build from scratch. They had to do this through discipline. Do you also know what when I was looking at that thing, I was just telling myself that as rigorous and difficult as the process of building wealth is, do you realize that to waste and to squander wealth, generational wealth, is also very easy to do? For instance, I told myself that if it took 28 years to make the first million in that generation, it means that if your father or your grandfather before you was not patient enough to build wealth for that 28 years and create the first million, that now makes the process of compounding lot easier and quicker and shorter. It means that somebody in that generation has to put in the sacrifice of painstakingly laboring and sweating for the time it will take to build the first million, because after you have built capital, to make more money becomes easier. But if nobody has made the sacrifice, follow the discipline, then someone has to start. But do you know that when somebody does it and then somebody is now born into that level of wealth and comfort, that person can just assume that it's very easy, and then that person might just take the generational wealth and go and squander it in one, might even be a gambling venture, something that has no possibility of return, something that is very careless and reckless. One person in that generation can still be the source of the doom. You can build wealth for years and one person will just come blow it all away. So when you're building wealth and you want to transfer assets to your children to continue the process of wealth building, because what you are building is generational wealth, you must make sure that you don't just transfer the money or the assets. You must also transfer necessarily the mindset in order to retain and maintain that wealth in that generation. So transferring wealth must be a process of teaching mindsets and then transferring assets. Don't give assets if you have not already deposited the mindset to maintain and retain that wealth that has been built. If that's all you take from today's meeting, then we have achieved something. So, back to the strategy of the SWC, which is the Road to 1 Million strategy, which is one of the things you will get if you take the SWC Field, SWC Pass subscription. You realize that maybe now you have decided that you want to start this wealth building journey and you want to be intentional about it. You want to buy stocks, you want to invest and build wealth. You realize that you need to know which companies you should be buying and why you should be buying those companies in this particular period of time. Now, if that becomes your challenge, that's where you now see the value and the need for that Road to 1 Million project or Road to 1 Million strategy. And then you now take it and start applying it. And if you decide you want to build wealth for 5 years, you will now know, okay, it is the 5-year subscription that I should go for. Or if you want to build it for a lifetime, you go for the lifetime option. I can see that Mr. Omini has his hand up. So I'm going to allow you to unmute your mic and ask your question or make your comments.
Thank you, Mr. Bosi. Can you hear me?
Yes, sir, we can. We can hear you.
Yes. I'm sorry if my question is somewhat out of place. I've not been joining the Zoom meeting for some time because I saw that much of what was being discussed was on the Skyward field. But related to what you are discussing, is that those of us who joined the GTI project we bought through Skyway Capital. I joined, I think it's 2017 or 2016 now, but not later than 2017. It's almost 10 years. I don't know if you are suggesting that it is too early. I did speak with you some time ago, and I said, yeah, what you are saying when I was maybe in the university, it would have made sense to me. I'm 71 now. So if you are asking me to do something that I'll wait until 30 years' time, it doesn't make sense to me. And when we started this thing, I bought shares not only for myself, I bought for my 4 children. So I don't know where we are because this lecture, I quite understand what you have reeled out, but it is saying that to expect to get something now is too soon. I don't know whether that is what I should take.
No, sir. Let me explain. Let me explain. I would have to go up. I would have to go a little bit backward in order to
Thank you
explain
very much.
and answer your question. And thank you. It's a very beautiful question you have raised. The question is simply for people who are advanced, right? What are we telling them? Are we now saying that they need to start building their portfolio and waiting for 30 years or 20 years in order to, get to 1 million? Now, the answer is no. You see, Skyward Community, before now, before they started Skyward Community Field, they had the crowdfunding website of SWC open to everyone. Everyone could participate. There was no SPV. You did not need an SPV, so the legal model of participation in the UST project through Skyward Community, how it was before, was not through SPV. You just basically, the SWC had an agreement with GTI, and the GTI portions were being sold, packages of the portions were being sold in the SWC's platform. Now, when that project, the GTI project, reached a point where SWC now started to feel that they have fulfilled their obligation in terms of the fact that according to the agreement, they were supposed to fund the project until the project gets to commercial implementation. And GTI had implemented one commercial project, a small one, but Aquarel Park, they had built a commercial product there. And then SWC said, according to our agreement, we have fulfilled our obligation and financed your project until it reached the first commercial product. And now that you have implemented a commercial project, even though a small one, we want to now open our platform to finance other projects. We want to make it a multi-project ecosystem. And GTI was not willing to, accept this new direction of SWC. And as a result, GTI now strengthened its partnership with the RSW platform, which is another crowdfunding platform that was also supporting their project. They strengthened their partnership and even updated the partnership model by, having that platform agree to operate as a dedicated marketing platform for them, which is now under a new brand name of Micron Global. So RSW now became or metamorphosed into Micron Global to exclusively finance the UST project. At that point, the partnership between SWC and GTI ended because financing the project of GTI was now exclusively on the Micron Global platform. So SWC can no longer participate in or attract investment into that project. So their partnership ended. Now, at this stage, SWC is now like a platform without a product or a project to finance. And it is a time of reflection for SWC, or at least it allowed them time to reflect that, okay, if we want to continue, how do we want to see, or how do we see ourselves moving forward? What kind of system and platform do we want to create for our participants to engage with projects? And SWC has to look at what factors can they control. The factors that they can control, they cannot control the projects that are financed in their platform For example, the UST project is out of their control. The decisions that the founder of that project is making, SWC has limited power to influence those decisions. So, but what they know that they can influence is something like the Road to 1 Million strategy, where they can actually teach people, give you real value, teach you how to pick projects in the stock market that build a portfolio of dividend paying companies in the stock market that at the end of the day you can build a portfolio of $1 million. So they now created this product, Road to 1 Million, to give people monthly signals of dividend paying companies in the US and Russia that they can buy and put in their portfolio with a goal to building a portfolio of $1 million, because those companies already in the stock market, they have lesser risk. Like I bought one company in June. I bought from the Road to 1 Million signal. I bought the company 1st of June. 30th of June, I was paid a dividend of $1.48 per share. Although I did not have so many shares, but it was a taste of dividends, that I could buy a company, get paid dividends. It was an experience that was meaningful, and it was an experience that made me also ask certain questions, that what if I had up to 10,000 shares in this company and they paid $1.48? That would be $14,800. If I had up to 100,000 shares, that would be $148,000, which is a lot of money when you convert it back to Naira. So, but the problem, of course, is that I cannot buy that number of shares. That company's share price is $136 per share. So I couldn't buy so many. In fact, I had the plan of investing $100 every month. So they gave a signal, they gave two companies. I had to share the money and buy a little here with $50 and a little there. So I wasn't even able to buy up to one share. At the end of the day, I had to buy 0.33 shares, 0.33 units of shares. So when they paid that dividends, I didn't even earn up to $1. Are you with me? But it made me ask, what if I had up to this number of shares in this company? And how beneficial would that be for me? Which is where investing in private companies now comes into play. For instance, in the UST project, through the Skyward community, I was able to accumulate several number of shares. For some people, you have up to 1 million shares. For some people, they have up to 100,000 shares. Imagine that such a company now gets into the public market and declares a dividend of, for example, that $1.48 that I received from the company I bought in June. And I held up to 100,000 shares. So necessarily, what I can understand that SWC is trying to do is they want to give us a balance. While you have a product for buying shares in the public market, you also have a platform that is showcasing private companies that have not yet gone public. You yourself will now decide where you want to allocate your capital. Do you want to buy the companies already trading in the stock market using the Road to 1 Million strategy? Or do you want to buy the private companies in their showcase, that are selling their shares at lesser price using the SPV that they create for participation in those projects? And when you decide that, you allocate your capital according to your decision, and you buy, for someone now like you who say you're already above 70, you might look at the strategy of Road to 1 Million that it does not suit you at this time, and you allocate your capital towards venture projects that have a short period of maturity, not something that's going to take another 10 years, but you're looking at a project that maybe has a short period of maturity, like Project Atlas, which has about 2-year maturity period according to the projection. So if you were to go into such a project and in the next 2 years they are already giving something meaningful for your investment, you begin to smile at the end of the day. So I believe SWC wants to give us the ability to make choice among several options. That's what their new architecture is all about. The availability of options for the investors.
Thank you very much. But can you give us any update on the one we already have on the GTI? Any update
I must tell you, I don't have that information. However, I do know where you can get that information. There was recently a video recording concerning the EcoFest, and that video recording is available in Micron Global. You probably will check, if you check your email, a mail was sent with the video recording of the last webinar by the Micron Global platform CEO, talking about all the plans for EcoFest. There, of course, is going to be a trip to EcoFest, which you might be aware of. But if you're not, please check your email. You must have received an email from Micron Global as long as you registered there. So check your email. There's something there that you're probably very interested in. Now, one other thing I must point out is, as it stands, that SWC and UST are no longer in partnership. We are not allowed to publicly talk about the GTI project. So if you have questions related to that project, there's a platform we created to be able to help participants however we can. So you drop your questions there and we will see how we can help. But for this kind of public presentation, the information is only relevant to SWC. The information I'll be sharing, only that which is relevant to the projects SWC is supporting at this present moment. That's Project Atlas and the strategy of Road to 1 Million. That's what I'll be talking and dwelling more about, and telling you also about SWC Pass, which I am hoping that everyone will try and get. And let me even tell you, there is a discount of $90 on SWC Pass when you use the promo code SWC Pass 90. I'm going to write it in the chat. So if you want to buy the SWC Pass, use this promo code SWC Pass 90 to give you a $90 discount. And it's limited. The number of slots in this is limited. So please use it before it's all sold out. Once the quota is exhausted, it will no longer be available. So I've just saved you $90 on your next purchase, but it's only applicable to the 1-year tariff plan. That's the essential. So you can only use that for the first tariff plan. If you plan to buy higher, you might need to pay, because of course the higher tiers, they're also highly discounted. What you pay for 1 year, for example, it's not what you are going to be paying if you pay for 5 years. 5 years is about $720, and 1 year is about $240, which when you check 240 times 5, discover that $720 is saving you a lot of money compared to somebody who buys 1 year and pays 5 times before he gets the value that you will be getting. So it's just the 1 year that has a discount code. But for those who have the Sky Prime status, I see Mr. Godwin is on this call. For those Sky Prime members, there's a special code for them. So if you want to buy the pass and you're a Sky Prime member, reach out to me for the promo code for Sky Prime members, and you'll probably be able to save up to 50% on your purchase in any of the tariff plan. Okay, so I think that pretty much answers that question. You have another question?
No other question.
Thank you. Thank you so much. And I must thank each and every one of you for your attentiveness during this meeting. The meeting was recorded. However, I noticed something. I noticed that a number of us don't usually come for these regional webinars because we know that there will be a recording. And so I started to try a system of discouraging people from just waiting for the recording by asking them to pay a fee to access the recording. It's a small fee just meant to discourage people from waiting for the recording. And the fee, I think, is about 1,500 Naira. So that people will stop relying on the recording and actually coming for the meetings. So I hope that for those of us who are here, we would always make it a habit to come for our subsequent events, and also invite your partners along with you, because the recordings moving on will not be accessible for free. There will be a small fee just to discourage people from waiting for recordings and actually encourage them to come for the meetings. Because when we have these meetings, it's more engaging, and when we have the engagement and the feedback, we can all benefit from it and learn together. So that will be all for tonight. We have spent 1 hour and 18 minutes on this call, and I am very grateful to each and every one of you that showed up. And for those who showed up early, I'm even more grateful to you. For those who contributed to the conversation and those who asked questions, I'm very grateful to you for your participation. Until our next meeting, which will be on the 4th Sunday of this month, I bid you adieu. God bless you and good night.